All right, I think we're good to start then. Kia ora to everyone, and thank you for coming to our session today, hosted by the Council for International Development. We've got a fantastic session for you planned for the next hour and 15 minutes, representatives from StoneX and Caritas Aotearoa. Today's session will be going over the topic of minimising financial wastage, uncovering the hidden costs of international payments. Plus, we'll also be giving an FX market update, currency projections, talking about economies in general in the developing world, relevant markets from our head of trading. This will be run as just a Zoom session, so there'll be a Q&A at the end. People will have the ability to ask questions as well. You can put a question in the chat if you like along the way, or as well, I think you'll be able to just speak up at the relevant time towards the end of the session. So feel free to get involved and get amongst it really. And hopefully everyone can see my screen just fine there. Today's agenda will be providing a quick little welcome overview of StoneX Global Payments. We'll dive into the meat of the topic, which is the differences between hard and local currencies, so minimising financial wastage. We'll do a quick Q&A session with Caritas as well. We'll dive then into the market update from our head of trading, and then we'll also open it up to a Q&A with the audience. So it's a quick overview of our speakers. So I've got myself, Michael Stachowiak. I'm head of business development, global payments, New Zealand, Australia for StoneX. I've also got Timothy Peng, head of trading for the APAC region, also at StoneX. We've got really pleased to have Amanda Gregan and Catherine Secco from Caritas joining us today. Amanda's the resource manager there, and Catherine the accountant. So diving into the topic itself, just to get people thinking about some of the issues we'll be chatting about. One of the questions I wanted to put out there was, does your organization usually send US dollar payments to your overseas partners? Or do you use maybe local currencies, say the Kina or the Fijian dollar or the Taka in Bangladesh, using the actual functional currency used in these markets, or is it usually a combination of the both? From our experience, we find it's generally the third option there. However, some people tend to sway between A and B as well, but we'll go over the details of the differences in this session today. Also wanted to get people thinking about some of the challenges that you face when sending funds overseas. I want people to think, have you ever encountered any of these types of issues? Delivery and delays, so the funds not getting there in the time that you expect them to arrive in. The full amount not being received, so the amount you thought that was going to arrive not necessarily arriving in its entirety. Unknown exchange rate. This is quite often an issue when sending particular currency, particular choices. I'll explain how that can happen. Issues with bad information, additional information needed after you've sent funds. So not always having the right information up front when money needs to be sent. And also funds being returned with no explanation. Most frustrating, and quite often much later after they've been sent, and usually a different amount to what was sent. Or worst case, you've experienced all of these things, in which case I'd very much like to have a chat and see if we could potentially help. A little bit of a quick background about StoneX. So some people may have heard of us. We were at the conference last year, but I'll give a quick overview again of who we are. So we are a large diversified financial services company, headquartered in New York, publicly traded, listed on the NASDAQ. I think at the moment we've got just over 3,000 employees, but we do operate across the continents essentially, and a broad range of financial services ranging from hedging, global payments, the team that I work in, securities clearing and execution services, but also a big physical commodities business. Global payments, so that's the team that I work in, has been around for about 30 years, and we provide local market expertise on the developing world, primarily on the delivery of currency into these markets. So we facilitate this through a network of about 350 correspondent banks. So we have relationships with banks all across the world. We hold accounts with all these banks. We purchase the local currency on behalf of our clients and deliver it to our clients' beneficiaries on their behalf. We provide access to a broad range of currencies, about 140 currencies across about 170 countries. So we really focus on the hard to get to places, and this is why we're so closely aligned to the aid and development sector. We do this in high volume, upwards of about $3 billion in month. And we do this for about 900 aid and development organizations globally. So I personally look after about 70 charities across Australia and New Zealand, and I spend the bulk of my time working with these organizations. We also have another side of our business, which is working with global banks. So the large financial institutions of the world, the majority of actually will use our network to extend their reach into a lot of these markets where it doesn't make sense for them to have their own accounts. So we're actually indirectly processing many of the world's payments into some of the hardest to get to places. Just a quick snapshot of some of the clients we work with. Some names you might be familiar with here. Just want to give people an idea of who we do work with. You might be looking at these and going, oh, hang on, no, I don't work with, we don't work with you in New Zealand, but we actually might work with your other entities in other countries. So that's just some understanding there. And we also do work with the very small organizations. These are some of the larger ones, obviously, but our product is catered towards all shapes and sizes of aid and development organizations. And just a quick snapshot of some of the currencies that we provide access to. Broad access, essentially, only the sanctioned countries are the ones that we can't access at the moment. We are specialists essentially in accessing these markets efficiently, safely, and confidently. So that's a bit about the organization. I'm going to dive into the topic now a little bit, chatting about minimizing financial wastage, because this is something that may not always be evident when sending funds. It's always an afterthought. It's a process, but actually it's key to what a lot of international aid development organizations do. And we, as specialists in this field, have identified losses that can be incurred through doing this inefficiently. So some misconceptions that I just wanted to go over quickly was, fees are the only costs associated with cross-border payment. This is false. The majority of the cost is actually incorporated in the exchange rate. There's a market rate, and then there's usually a spread or a margin applied. And depending on what currency you're trading in, that can vary. What size you're trading on, that can vary. But also it'll vary per provider, obviously. And that's where the transparency and the ability to actually compare. I'm going to go through how to do that a bit later on. It's always better to send US dollars. Now, this is a historical myth that US dollars is always a better currency to send. It's actually quite an inefficient currency to send in the majority of cases, because when you're sending US dollars to be converted locally, you're essentially sending it to a party that's a captive client. Their only option to convert those funds locally, because ultimately they're going to have to take those dollars and convert it into their local currency, because that's the currency that is being used, the functional currency in that country. They have no control over that exchange rate. They're sort of at the mercy of their bank quoting them that rate. So this is one of the hidden costs associated when sending funds overseas. You also have a risk on that local bank too. So working with that one bank there that the provider has. And the other point where this comes into play is when things go wrong, there is a convoluted chain of communication. So you typically have to work through intermediary banks when sending US dollars to markets outside the US, let's say Cambodia, Timor-Leste, these markets where they do use US dollars, or anywhere for that fact, Nepal. If something goes wrong, the chain of messaging to actually find out where the funds are has to go through multiple banks, and that can really slow down the process. Another common myth, all payment companies use the same process to move money internationally. This is not true. Many providers will rely on middlemen to deliver certain currencies. So what I mean by that is there are providers out there who may actually just be providing access to reselling access of another bank. So there's actually multiple middlemen involved in a lot of these sequences, in contrast to the way that we tend to operate, which is to have direct market access, direct relationships with local banks in these markets, that localization, actually understanding, and they're usually mid-tier banks that we work with, ones that are actually really, I guess, dependent on getting those flows into the country and the services that we provide to actually get the liquidity that they need in a lot of these markets. So the other myth too, if payment company does it, it must be legal. The underlying NGO cannot face any sorts of consequences. Again, this is false. Regulatory violations, even those committed unknowingly, can result in NGOs being fined or shut down So again, something to be cognizant of and aware of when working with different providers. Different types of payments. So this is really something I want to go through here. So different ways of sending funds. So let's broadly into 3 different categories. You can send, say, Kiwi dollars to be credited to a Kiwi dollar account that your partner has overseas. You could send US dollars to be converted locally onshore. We see that quite often. Or you can actually send the local currency directly. What are the differences? So let's say an NGO wants to send 100,000 Kiwi dollars. They'll put that through their bank. Bank may deduct a $25 fee, let's say. It could be less, could be $10 as a fee. There'll be an intermediary bank, because if you're moving a currency that's not local to the destination country, there'll be a bank in between. They'll deduct the fee. Let's call that $40. It can vary. And then an amount a bit less arrives. So let's say in this example, we're looking at Nepal. So a bit less than 100,000 would arrive. And that Kiwi dollars will sit in that account at that beneficiary, and they then may convert those funds down when they see fit. But you have no control over that conversion. And ultimately, they will need to convert those funds at some point, because that's the currency that's being used in the country. So the challenges with this method, you've got intermediary fees, you've got a risk on the local bank, there's a risk of misappropriation of funds. Obviously, it's much easier to divert and move funds that are freely traded as opposed to those in the local currency. Once funds are actually in the local currency, there is a greater degree of certainty and a much more difficult to convert and move and use those funds for another purpose. You also have no direct communication with the local bank. You've essentially handed that over to the partner to manage onshore. Option 2, we're sending US dollars in this example. So let's say New Zealand organisation, NGO, sends equal 100,000 Kiwi dollars, converting to US dollars. Again, the bank may charge a fee. Let's call it $25. Gets converted to US dollars, goes through an intermediary again, another deduction, and US dollars arrive in the country. Now they're holding US dollars. Very similar to the first example, except they've now got US dollars opposed to Kiwi dollars. This is a very, very common situation. That Kiwi dollars now gets converted, or that US dollars gets converted down into, say, Nepalese rupee at a rate that local bank determines. Now, you've again got no control over that rate, and the rupee is then converted, and that partner may then report back to you at some stage that it was converted at a particular rate. Again, challenges with this model, you've got intermediary fees, there's no direct communication with the local bank, and you've got no control over the exchange rate. That's the crucial part there. It's really at the mercy of whatever the local bank dictates. Now, the third option, the one that we advocate for, is using the local currency. So let's say in this example, you're sending 100,000 Kiwi dollars again. You're doing this through a provider to convert into Nepalese rupee directly up front. Because you're doing that up front, you're actually doing that in a competitive nature, because it's typically done against a number of providers. Or if not, that one provider has access to multiple liquidity providers onshore. So there's a competitive nature to that rate. So you're actually getting a better execution onshore. And ultimately, those funds are being delivered locally through an account. Let's say in the StoneX example, we'd be instructing our bank in Nepal to credit those funds directly to your beneficiary at a rate that would be optimal or to that of if the US dollars was sent. Again, because you've got that competitive nature that's built in, you're getting a better rate, a better execution. There's more than one provider or more than one provider in that space that's actually providing that or bidding for that business there. So there's no intermediary fees. You've got direct communication with the local bank, and you've got, crucially, transparency on the exchange rate that was applied and control over that, because the conversion is happening before the funds are being sent. Some differences between local and hard. So in that example, local is, like Nepalese rupee. Hard would be sending Kiwi dollar, US dollar, any currency that's not local to the market that you're going into. Local currency, you find there's no intermediary banks, so you've got reduced chance of delays, no fees, the full amount received. That's a key advantage there. You've got a guaranteed exchange rate up front, so the sender, you, the party, can ensure that the rate is competitive before you send the funds, not afterwards when you've lost control already. Crucially, you can manage that process from headquarters. You can ensure it is compliant with current regulations, reputable counterparties are used. In-country regulators also prefer the use of local currency, because ultimately that's bringing additional liquidity onshore to them. overall more secure and accurate process. As opposed to the hard currency options, sending US dollars, Kiwi dollars, must be routed through an intermediary bank, more middlemen, greater risk of delay, fees, deductions, not the full amount being received, an unknown exchange rate being applied ultimately. Many people will send US dollars and go, well, that's the rate that I sent it at, but actually no, because then there's a subsequent conversion taking place on shore. You don't have visibility of that typically unless they're reporting it back to you, but even then you have no control. Conversions taken locally, risk of fraud, counterparty currency, country risk, if you're not doing that up front yourself. Also, there's a risk of maintaining large sums of hard currency in country can lead to potential risks, misappropriation of funds, significant country and credit risk, lack of accounting transparency as well, and no visibility of tracking where that payment is. So just some points there, determining which option to use. It's not clear cut necessarily. There are some markets where the dollar is still the primary currency. Zimbabwe is a great example, Cambodia. Whilst they have local currencies, they're still very dollarized economies, but you're taking markets like Nepal, India, Bangladesh, these markets where we do see traditionally a lot of dollars being sent, but ultimately far greater efficiency if you convert the funds up front to the local currency to have that control. Things to think about: what will happen to the funds once they arrive on shore? Are they ultimately just going to be converted anyway? Consider sending local first yourself. What currency will the funds be sent in? Again, consider that when deciding between which one to use. Do I have the policies and procedures in place to avoid mishandling of funds, the visibility and the reporting back to you about how the funds were converted and what rate, and how stable is the local banking system? So again, just consider sending local currency on an as-need basis, I think is the key takeaway here. It's not a one-size-fits-all, but it's definitely the optimal way of transacting and transferring funds and working with partners overseas is the message there. Quick little case study here. We had a little, when the misconception in the beginning was talking about determining the true cost. And again, we've got 3 different providers here on the screen. They're all quoting different rates and different fees to transfer funds. How do you work out which one is actually the best option? Again, it's all about looking at not necessarily the rate that they're quoting you, but actually looking at the amount received versus the amount you've paid to calculate the true exchange rate. So factoring all the fees to actually work out and then compare. So in the first example A here, we can take that recipient A would get X amount of Nepalese rupee, 551,333, and you're sending 5,000 US in this example. So we had a true exchange rate of 110.226, which again is crucially different to the guaranteed rate that is being quoted there. So you can see there is some work that needs to be done to uncover the actual exchange rate that you're being presented there. This is where the confusion comes in. Option 2 here, you can see again, let's take the amount received and divide that by the amount paid, and we get the true exchange rate 108. So less than option A still. And crucially, the rate is quite different to that which was quoted on screen. Actually, in that example, that one was exactly the same. So there's no fee. So a different way of presenting it. Option C there, we take the amount that was received divided by the amount paid, and we get the true exchange rate there. So we can see now it's easy to compare and see which provider is the best option. Option A. So a lot of numbers, but essentially that's the best way to work out who's going to provide you the best rate, the true cost. Another thing to think about is when talking to different providers, when asking them and what they say to you in particular, which provider would you use out of these 3? Let's say one says to you, I will charge you 1% on all your conversions. Another will say, I'll charge you 2% on all your conversions. And then the third will say, I'll just charge you a $10 flat fee per payment. Now, one might be drawn to either A or maybe C, but hopefully not C, as we've spoken about the bulk of the cost being in the conversion. But as we can see here, as we look at the exchange rate a bit closer, the rate that a company A can actually access is quite different to the rate that company B can access. because they have access to different providers behind the scenes, different local banks they work with. So if we take that 1% that they're saying that they'll claim, that they'll charge on top of the rate that they can access, versus the rate that company B, which said 2%, which sounded worse, but because of their ability to access a better rate, all of a sudden their actual exchange rate that you'll end up transacting on is superior. So the key there is to always look at the exchange rate, discount what's actually being said, look at the numbers and work it out yourself, and then you'll see that which one is the best provider in that sense. So some key takeaways here. So things to remember: majority of the cost, it's always hidden in the exchange rate. You've got to look at that to really work out what you're paying. The behind the scenes transfer process matters. Really think about how you're sending those funds. Give priority to the local currency. It's the most efficient way in the majority of cases, and make sure you're adherent to local regulations. And that can come about by working with a provider that has knowledge of those regulations onshore, has those relationships with the providers in the country. So that's it for me. Up next, we're going to have a quick Q&A session with our guest, Caritas Aotearoa. I've said that right. So we've got myself, Amanda Gregan, the resource manager at Caritas, and we've also got Catherine Secco, accountant at Caritas. Amanda, Catherine, welcome.
Thanks, Michael.
It's a pleasure to have you here. Perhaps we could kick off by maybe, Amanda, if you could give us a little bit of an overview of your role at Caritas and what you do there, just for the sake of the audience, so that we've got an understanding of where we're coming from.
Well, thanks, Michael. Okay, so I'm resource manager, as Michael said earlier. My role is to generally oversee the financial health of Caritas, just to ensure its continued viability. I work closely with Catherine to monitor cash flow, manage expenses, produce accurate financial information. And we've got a whole team of processors who have to sort of, record accurately our donations coming in, process the payments, and track those donations for the donors so that we can receive them and keep them up to date on our work. I also work closely with the management team and looking at our strategy around the finances in the form of income and expense, and we report our financial health to the board on a quarterly basis as well.
Great, thanks, Amanda. And Catherine, do you want to give a little insight to your role at Caritas?
Yes, so I am responsible for the management and day-to-day running of Caritas finances. I ensure Caritas's finances are organized and efficient, and that accurate financial and management accounting reports are prepared. I work closely with Amanda, our resource manager, to ensure the organization has efficient and effective processes and systems in place to ensure the ongoing financial sustainability of the organization, and that we are fully compliant with all financial recording and auditing requirements. And one element of my role is the payment of funds to in-country partners and partner agencies, such as other Caritas sister agencies around the world.
Great, thanks, Catherine. Perhaps maybe for the sake of those who aren't familiar with Caritas, Amanda, do you want to give people a quick overview of who Caritas are and work you do and places you work?
Sure. So Caritas Aotearoa New Zealand, we're part of an international confederation. There's about 165 agencies around the world, and including Oceania, Asia, Middle East, Latin America, the UK, Australia, and so we provide emergency supports after major disasters, and we also advocate to change structures that cause poverty around the world. So we do quite a lot of development work, particularly in Oceania and Southeast Asia. And we do also, we work really closely with the Catholic schools around New Zealand, and we educate and inform on causes of poverty and injustice, and promote action for real change. As a humanitarian organisation, we're about the second biggest internationally, I understand, after Red Cross. So yeah, while a lot of people haven't heard of us necessarily, we are quite a significant player on the world stage.
No, it's quite remarkable. And even just yesterday we were chatting, I wasn't aware of that, and I think it was quite incredible to hear the size of it. But it is true, like Caritas really is in the majority of places you see, you will find actually a Caritas entity. It may not always go by the same name. You got like CAFID in the UK, and then you got Cordaid in the Netherlands, but yeah, it really does have quite a broad reach. I think that sort of lends well to, I guess, the services that we tend to provide, which is giving access to all those markets essentially, because it really is a broad range of currencies and countries that you're working across, particularly just given your size. I mean, I think how would you say, how many countries do you actually sort of are sending funds to at the moment, roughly? Off the top of your head, maybe.
Maybe it could be in 1 year up to like a dozen to 12 to 15 countries.
But essentially the reach is much broader than, say, just the Pacific and APAC itself. It is really going further abroad too, from what I understand. I think, recent example, I think there was some work in sort of in the Jordan and in the Middle East type region. There's.
That's right. Yeah, we have a partner. We partner with Bethlehem University and Caritas Jerusalem. So we do work specifically with some partners outside of that oceanic region. Yeah, and of course responding to those international emergencies. So that can be places like, Ukraine, Lebanon.
Yeah, and that Ukraine in particular is one of those markets that at least from a StoneX perspective, prior to the war commencing, we were providing local currency access. We had to retract that back and cut off all access for a period, but I think just within the last sort of month ago or so, we actually were able to re-enable delivery of at least particular payments going into that market. So we are starting to see that open up, that places like Lebanon are ones that we also cater towards and provide access to. Because essentially that's quite often the dilemma here, that the places that are most in need of the assistance are quite often the hardest places to reach. Yeah, and ones that the majority of providers, banks, are the most, I'd say, hesitant to help with.
Yeah, and actually, our network is incredibly valuable. For example, Afghanistan, at the time that the Taliban took over, and there was that huge kind of crisis, and people wanting to help. We actually weren't able to get money from New Zealand banks through to, this was, I think, prior to the time we were with StoneX. We were unable to get money through banks in New Zealand because it was a sanctioned country, sanctioned destination at that point. So we had to think kind of how we could best use the network. So we worked with CRS, Catholic Relief Services in the US, who were actually on the ground in Afghanistan and were able to kind of ensure that funds could get down where it was, get through where it was most needed.
Yeah, and it's remarkable how, I guess, creative, organisations such as yourselves are and essentially have to be when working in these places, because it's never an easy task to do. It's all about the partnerships and the collaborations you can do to achieve those outcomes. I think that's testament to people coming together in conferences such as this one, looking for ways to collaborate with each other and share learnings. Even just I think recently we were chatting about your trip to Australia and chatting with Caritas in Australia. There's learnings to be had across offices and even just across organisations too. I know personally StoneX, when it comes to Afghanistan, was a market that we were very active in delivery of the local currency. Obviously, again, we had to pull back, unfortunately, from providing access there. We're still providing assistance where possible in the majority of cases to surrounding regions, purchase of goods being transported cross-border. But inherently, we are dictated by sanctions and the rules that are put in place to actually deliver funds directly, irrespective of directives that are made to provide assistance to humanitarian aid work. It's still a very challenging place to be, but we're always doing what we can in these types of markets. Great. So that's that was a good overview. Thank you for that, man. I just thought probably might be good to, for the sake of people on the call, just to describe a little bit about how your current process works when you're transferring funds overseas.
Yeah, so we receive memorandum and background documents from our programs team, which would include the contact details of the partners, And we independently confirm the bank details with the partner, such as the bank address, etc. And the memo will also include details on how much in New Zealand dollars and what currency to transfer it in. And then I'm the one who sets up the delivery details in StoneX. And then after which, Amanda will receive an email notification from StoneX to go in and check the payment delivery request. She will check these details against the program team's payment memo to ensure it is accurate before approving. Or there are instances where she could go back to me with questions before the approval. And this need to only happen once for an account that may be used on an ongoing basis. For example, the accounts are accounts with in-country partners. And then once the delivery details have been confirmed, the second stage in the process is me setting up the actual transfer amount details. And then again, Amanda will receive the notification from StoneX to approve this. And once approved, I will execute the transaction, and this is the part where we can see the exact conversion rates. And then we ensure the amount to be transferred to StoneX is ready in our bank account for payment.
Great. Great. I think it sums up nicely how that sort of process works. And I guess as a contrast to that, how does that differ from the previous process that you used to sort of have in place for overseas transfers?
Yes, so this process previously took more time. We experienced delays and the conversion wasn't as streamlined. So this was being carried out by ourselves without any trading in international currencies that requires a huge amount of knowledge, research, and monitoring. And also, as you mentioned earlier, Michael, there are often hidden costs or fees, and we weren't entirely sure if the conversion was as competitive as it could be.
Right. So you had fees that were being deducted. You had no certainty or confidence around the rate that was being applied. Because I think that's one of the key things that we always push on is, we show the rate, so you know upfront exactly what is being transacted on. And this is always in contrast to what we hear about experiences from other organizations where they're just submitting without even thinking about that, even giving it much consideration. Because that's really where, particularly when transacting in large quantities, there could be significant differences if more attention was given to that. Really thinking about it competitively, actually working with a provider that has that actually inherently built into their product, such as ours. But even I even advocate always bidding out your business to more than one provider. Let's say you could always be benchmarking periodically, making sure you're getting the best possible value. Because at the end of the day, you've been trusted your donor funds, and you want to maximize the impact from the funds that you're delivering to your partners. Because these small differences can translate to big outcomes on the other side in these developing economies. So I guess maybe just from your perspective, Amanda, in this sequence, what would you say was sort of the advantages that you've come across in this change of process?
Sure. Well, I'm not an accountant, but as a manager, I've found this process, it's much more streamlined, and it does actually provide us with greater assurance. It seems to be a much faster process. We're not facing that issue of the unknown with the double, often having the double fees. And we know that we can't, have that assurance of knowing actually we've got experts at the other end that of ensuring that through research and being across the financial markets, we're getting the best currency, and it's ending up with the partner with the maximum amount that we can achieve through the exchange and in their currency, and it's accessible for them. That for us is the most important element. That's really key. And I think also it's really useful getting market updates about currencies and other sort of financial information. So, for example, at the beginning of the Ukraine crisis, we received updates from StoneX regarding like payments in euro and USD being accepted in the Ukraine, but also that at that point they couldn't guarantee delivery because of the instability right at the beginning. And as that changed, so did the updates. So yeah, we sort of felt we had greater confidence in conversion and transfer, which benefited the partners. And also, it's not really just for those large payments, which we kind of came to appreciate a few months ago when we had a staff member traveling in Jordan, and they were found that they had USD and they were unable to pay their taxi driver. And so we were quickly notified through text, and we were able to set up through StoneX a payment in the local currency that went straight into the taxi driver's bank account. So that was, yeah, ideal.
Yeah, no, it's a great story there. I mean, last thing, you don't want to be in the awkward spot and being able to pay your taxi driver. Showed a lot of faith in your CEO there when they were traveling. So I think that was a good story. And having that access to a broad range of currencies, you never know when another one might be needed, and in the local currency, because at the end of the day, that driver, he's got a Jordanian bank account, I guess, not a US dollar one, and that's the currency he needs to go about his life. So it's a good example there. And I guess, Catherine, we've spoken a little bit about the advantages. Do you have anything to add there in terms of benefits that you've sort of picked up on through change of process?
Yeah, sure. I think StoneX has made the process more robust for us, as currency markets can be extremely difficult to predict, and exchange rates are always volatile, and even small market movements can have a big impact. We have found that we get better rates by using StoneX. For example, if we were sending in New Zealand dollar, it would translate for our partners getting more from the same amount of New Zealand dollars. Or if we were to send in the local currency, StoneX has allowed us to do this, but previously this was not the case. There are limited number of currencies that we can process.
Right, so you got access to a broader range of currencies.
Yes.
Better exchange rates effectively. So yeah, good. That's great to hear. And just to make sure that this is not all one-sided, I guess, it'd be good to hear from yourselves as well. What were some of the I guess the hurdles you faced in this transition, or sort of adopting this new process?
It's actually been a really smooth process. I guess there's been a wee bit of uncertainty to begin with. We weren't sure because it was new, but it's been really good to have Michael along for the ride with us. He's accompanied us right from the word go, and now we can reach out to if we have any questions or any uncertainties. So that's been great.
Okay, great. I guess, yeah, that's sort of testament to sort of what we focus on. High touch customer service there when you need it. It is sort of the core focus of what we provide, and just making sure you're getting the most of what you need and out of that service there. So no, thanks for giving that insight, Amanda there and Catherine. And I think we'll keep you. We'll have a chance for the participants to do some Q&A if they're curious to learn a bit more. Maybe an opportunity to potentially see tomorrow as well. There might be at the in-person aspects of the conference. We'll see, but there'll be a chance to do some questions towards the end of the session. So,
Michael,
Amanda, Catherine. Oh yeah.
Sorry.
Tim?
Please go ahead. Please just.
No, that's all right.
Michael, I see there's some questions on the chat, so maybe would you like me to take them? I see some good questions from Jaden Buckley.
Oh yes, indeed, Jaden. Thank you. So just for the sake of those on the call here, there's a question from Jaden. Thank you, asking, do we utilize UNDP to assist with delivery of funds to conflict and post-conflict zones? Tim?
So to answer that, actually, UNDP, they use us in certain regions. So no, we do not. To answer your question specifically, we do not use the UNDP to deliver funds into conflict or post-conflict zones. That's the quick answer to your question. They do utilize us in certain jurisdictions when going back to what Michael said, when they compare rates with their providers and they see, okay, StoneX's rate today is better. So in those situations, we have been assisting them in payments into certain jurisdictions. I hope that answers your question.
Yeah, no, thanks, Dan. I think there was, oh yeah, there we go. Thanks, Jaden. There was just a quick subsequent question too. How do you manage the AML requirements when delivering to on-the-ground suppliers? So from that perspective, we have compliance, which is key to what we do. I always say that without compliance, we would not be able to provide this service. It's paramount. So from an AML perspective, we'd be doing due diligence, KYC on all our clients when we open accounts for them. We also do this on a transaction basis. So we do all the sanction screening, PEP screening as well, against the names and the beneficiary details for every transaction. We screen every payment multiple times when it goes through our system, both when it comes in and also prior to being released. We also do regular post-transaction reviews on our transactions and our clients, but also on the banks that we use and the counterparties that we're using to deliver these funds in country. That's sort of, so it's multifaceted in that case, and it's at the core of what we do essentially, given the regime and the requirements that we work across. So Tim, I don't know if there's anything you wanted to add to that one.
Sure, thanks, Michael. If I can just add a little bit more. Payments, you specifically asked the AML requirement. How do we deal with AML requirements when delivering to on-the-ground suppliers? When our local banks also transfer the local currency, they will also screen both remitters and beneficiary names to make sure that nobody is on any watch list anywhere. So there's a screening done by the locals. There's a screening done on our side. There's a screening also done when we actually send funds into that country. So for example, when the Ukraine war broke out, a lot of the Russian banks started getting censured. We had to stop sending funds through those banks, even though they weren't intended for those banks. So for example, a bank in Kyrgyzstan that we needed to send local currency for projects, they route their dollars through a Russian bank. And because of the war, we had to stop sending funds through those Russian banks, certain Russian banks. So the AML aspect of our business is very much a focus. It's very important to us. We couldn't face these multi-billion-dollar fines that you read about in the papers that certain banks face. So we take this very seriously, and our local partners also do that. They are also very afraid of money laundering in today's regulatory environment. I hope that answers your question as well.
Thanks, Tim. All right, jumping ahead. Next up, we've actually got Tim providing our FX market update. So, Tim, I'll allow you to take the floor then.
Thanks, Michael. Good afternoon again, everyone. My name is Timothy Peng, and in my day-to-day work, I trade foreign exchange with a focus on the Asia-Pacific region for StoneX Global Payments. It's great to be back and presenting for you all again, and thanks again to the Council for International Development for the opportunity to speak. Like I did last year, I thought it might be useful or helpful to give a quick market update on the main foreign exchange markets that we see our New Zealand clients tend to be most interested in. Michael, next slide, please. Thank you. So before we begin, I need to get the usual markets disclaimer out of the way. We use Bloomberg as a source of reference. These forecasts are for informational purposes only and shouldn't be taken as investment advice. Notably, certain currencies are a bit more obscure, so there are no Bloomberg forecasts for those, and these will be denoted with an asterisk. So without further delay, let's move on to our first currency, the Ugandan shilling. The Ugandan shilling, unlike many African FX markets, trades in a free-floating format with minimal intervention from the Bank of Uganda, the BOU. The central bank will generally only intervene in times of exceptional volatility. For this reason, generally the shilling will trend alongside wider global risk appetite for frontier FX markets, unlike some of its regional counterparts, which operate under a more controlled or semi-managed FX policy regime. The Bank of Uganda increased its benchmark lending rate for the 4th time in a row in October, currently at 10% from 9% previously, as it attempts to curb the highest inflation in a decade. Rising inflation that is impacting all African nations is being worsened by higher food and energy prices due to the Russian conflict with Ukraine. And you'll see this doesn't affect just just Uganda. Right? At the same meeting, the regulator signaled further rate hikes until rampant inflation is brought under control. Otherwise, like many other frontier markets with anticipated monetary tightening in developed economies, meaning interest rate hikes, it is likely the Ugandan shilling will come under further pressure as global investors stay away from perceived riskier assets, such as frontier markets. As a further consequence of rising interest rates globally, funding the country's current account deficit will become more costly. They need to pay higher interest on their loans, on their debt, and this will increase pressure on the local unit. You can see this in the forecast weakening of the Ugandan shilling to 2,400 odd in next year Q3. Next slide, please, Michael. Next, we move on to India. Inflation from India has increased from 7 to 7.41%, and this is above the central bank's target band of 2 to 6%, and much higher than the initial forecast of 4% in February this year. To combat this, the RBI has since hiked rates from 4.4 to 5.9% in the last 6 months. In the latest Monetary Policy Committee meeting, external members have expressed their concerns about rates rising too quickly and endangering the economic recovery. Therefore, it seems like going forward, they may adopt smaller 35-point hikes instead. With that as a backdrop, the rupee has hit a record low against the US dollar this year, and the RBI has been spotted intervening in the market to prevent further losses. Whether they'll be able to stem the tide long-term remains to be seen, but the rupee will definitely be helped if oil prices stay low, being a net oil importer. Forecasts show the rupee weakening gradually versus the Kiwi dollar over the next few quarters. Next slide, please. Next, we move on to their neighbor, Bangladesh. Bangladesh's inflation numbers remain high and show no signs of easing, well above the bank's inflation target of 5.6%, rather specific 5.6% there. The central bank most recently increased its policy rate from 5 to 5.5% to combat these inflationary pressures, predominantly driven by commodity price hikes in the global market. For example, the country is facing power shortages as the government has shut down all diesel-run power plants to reduce import expenditures as diesel prices have soared. Just earlier this month, they had a blackout that lasted almost 7 hours, which impacted most of the country, including their capital, Dhaka. So the central bank's reserves are presently forecast to have enough for about 5 months of imports, and talk is ongoing about obtaining a preemptive IMF loan to shore up their finances. But if they do approach the IMF for a handout, that explains why the government has stated the Bangladeshi taka will eventually be moving from its current managed float toward a free-floating currency, as that's a basic criteria for obtaining an IMF loan, among others. I think we will see further weakness in the taka in the quarters ahead. Next slide, please. Now looking at Papua New Guinea. Papua New Guinea has shown moderate price increases compared to some other markets, up from 5.47 to June's number of 6.9%. The central bank has hiked rates just 25 points in July, from 3 to 3.25 to combat this, and has kept it flat since then. The central bank has also increased reserve requirement from 7 to 8, then to 9%. To drain liquidity from the market and control prices. Essentially, they are saying that the banks in the country need to hold more of their deposits as opposed to lending them out to the economy. This shrinks the monetary supply in the country and acts as a cooling measure, so similar to increasing interest rates. So the increase in the reserve requirement is a gradual normalization of their ratio of their reserve requirement, which was increased from 7 to 10% back in March 2020. That was done to help boost the economy during COVID-19. And now they are beginning to normalize that. The central bank is also expecting their external sector to improve significantly, mainly driven by higher production of major export commodities, such as crude petroleum, LNG, liquefied natural gas, gold, and copper. particularly in the LNG industry. In April this year, ExxonMobil paid more than 1.1 billion kina in LNG taxes to the government. That's more than 500 million New Zealand dollars. So puts things into perspective, doesn't it? These tax dollars, export incomes supported by higher commodity prices are expected to improve Papua New Guinea's current account deficit into 2023 and beyond. However, the key takeaway here is that they are still running a deficit where total debt is currently more than 50% of GDP and raises concerns about debt sustainability. Because of that, the central bank has urged the government to, adopt more prudent fiscal policies and trying to urge them to reduce their national debt. Next slide, please. Next, we move to the smaller island nation of Fiji, a population of about 1 million people. Fiji's central bank has kept rates flat at about 0.25% as they work towards their twin objectives of low inflation and building sufficient foreign reserves to cover at least 4 to 5 months of import payments. At present, the Reserve Bank of Fiji has kept rates for the past 2 years flat and have thus far resisted hiking rates. It's now still at 0.25%. But given inflation is persistently above their target, I expect them to eventually increase their overnight policy rate, and this should affect the New Zealand Fiji dollar forecast as on the screen. As it currently stands, the simple interest rate differentials with developed economies will encourage investors to hold deposits in foreign currency at higher rates instead of Fijian dollars, and that will pressure the Fijian dollar further. Next slide, please. On to Australia, where we see inflation coming in at 6.1% in June, more than double the RBA's upper target limit. To address this, same as many other central banks, the RBA has been steadily increasing their policy rate, having jumped 50 points each in 4 consecutive hikes. However, the RBA in its latest meeting on October 5th hiked rates by just 25 points, which was surprising at the time as they were the first major central bank to ease off on large rate hikes. However, coming back to the inflation figure, with inflation more than 100% over their target, they've stated further hikes are expected into 2023, but perhaps they'll be doing so in smaller 25-point increments. Indeed, according to the RBA minutes released just yesterday, one reason for the lower than expected increase was to allow the RBA time to assess the effects of the hike so far, as they also expressed concern about the sharp hikes being a risk to both global and domestic growth. Remember this point as it contrasts with what we'll see in the next slide. Next, please, Michael. So if we're looking at the New Zealand dollar, US dollar rate, we have to look at America. Inflation in the US continues to run very high, as the Federal Reserve Committee members in their interviews keep alluding to the fact that they will not give up the fight against high inflation and will continue to hike rates until prices are again under control. The speed and magnitude of these hikes, 75 points in the last 3, 50 points before that, have led to some markets people saying this will tip the US into a recession, while the Federal Reserve in the early days of their hikes kept saying, no, we are going to be able to avoid one, instead purportedly looking towards a soft landing for the economy. As time has gone by, contrast this to about 1 week ago, where US President Biden conceded there's a risk of a slight recession for the US. I think this has just shown a shift in the narrative. Such sharp hikes that are intended to cool down business activity, reduce imports, also impact the housing market, construction companies. Just ask any individual here who is on a floating mortgage. All this gives further clues as to why the RBA hiked only 25 points, as I mentioned in my earlier slide. And to be honest, I think in my opinion, was the prudent thing for them to do in their situation. Interestingly enough, in these Bloomberg forecasts, the Kiwi dollar is forecast to gain versus the US, and perhaps this is off the back of expectations that once rate hikes slow down in the US, American dollar strength should taper off as well. So in summary, next page, please, Michael. There's a missing slide here, so let me just talk this through. In summary, in every single country we've looked at, we are seeing inflationary pressures, with many of them more than 100% over their central bank's targets. Until prices come back down, or we enter into serious recessions, I expect central banks to continue hiking rates in the hope this will cool down their economies. But as these rate hikes continue, there's a real chance of something breaking somewhere in the world, like the noise we've heard recently surrounding Credit Suisse and Deutsche Bank of late. Share prices of these companies have been battered, and there's concern of certain banks going bankrupt that might trigger another Lehman effect, like what we saw in the financial crisis. But times are very different now, so I'm still relatively optimistic that things don't blow up to that extent. But at the same time, there's also concerns about how escalation in war in Europe will affect markets, with the euro already languishing at 20-year lows. So if the war spreads to other parts of Europe, global commodity prices, imports and exports will be affected, and countries who aren't directly vested as well will feel its impact. Besides that, China's 20th National Congress was held just last weekend, and in his hour-long speech, President Xi in China vowed to keep with its zero COVID policy, only country in the world doing that at the moment, thereby hobbling its manufacturing capacities to some extent amid its invariable lockdowns. This also means economic activity in China will be vastly different versus a full opening up. And this also affects demand for oil, right? At the same time, he also declared they will never renounce the use of force over Taiwan, a fundamental issue for them. Does this mean there's a possibility of a second war theater? I certainly hope not, but if true, war will push up oil and commodity prices further. So to add to that, we've also seen OPEC cut oil production by 2 million barrels per day in the face of a worldwide economic slowdown, thereby keeping their oil prices supported. They don't want to see things back at $60 a barrel, right? But the US isn't very happy about this. And in this global backdrop, it's no surprise we are seeing heightened volatility in the markets, not just in FX, also in equities, bonds, commodities, among others. One thing's for sure, volatility seems to be the only thing you can count on these days. With that, I've come to the end of my segment. I hope this has been useful in some form or another. We're now open for questions, so please feel free to ask and we'll answer them as best we can. Thank you.
Thanks, Tim. Appreciate that. Yeah, so that sort of brings an end to the content that we had planned for today. We got the floor open to all the speakers today, myself, Tim, Amanda, Catherine, any questions that people might have. And let's have a look here. So, all right, we've got a question here from Matt, thanks. How would you say your currency exchange services compare to other providers like WU, I'd assume Western Union? So I'd say in our instances, our core focus really is working with aid and development. Our whole product has its foundation, and the platform itself that we provide our clients has been built from the ground up with feedback we received from the aid and development community. So, 30 years ago, our first clients that we're working with were the likes of the UNICEF family of organizations trying to deliver funds into sub-Saharan Africa. The founders identified that there was an issue with them trying to gain access to local currency and certainty, and started opening up their own accounts in that region for that specific purpose, and it's just expanded from there. So it's really just our core focus, and we don't work with individuals, we don't do cash, we just do bank-to-bank transfers. It really is like a laser focus on sort of the needs of the aid and development community. We work with many organizations like SID around the world to deliver market updates, information sharing, best practices in terms of current foreign currency. These are the ways that we sort of like to differentiate, and also it's that network that we have to access a lot of these markets. I sort of alluded to it in the slides preceding that one of the myths that all providers use the same method to deliver their currency, but in actual fact, providers are quite often reutilizing, reselling other banks, other providers' access, and because of the two-sided nature of our business. We work with charities and we work with large financial institutions. So those financial institutions will rely on us to access a lot of these markets. Like let's take Nepal, for example. Some of our competitors may just be utilizing a global bank who's then utilizing our network to access some of these markets. So we, in many cases, we're already indirectly processing payments from some of our competitors, oddly enough. So it's a bit of a unique position that puts us in. We really are sort of that final step into a lot of these economies that global players rely on. So that's how I like to think we differentiate. I don't know if Tim, you had any thoughts on that one?
Let me just unmute. I think you answered it for the most part, Michael. I mean, to directly answer that question, I think Western Union are a very different provider from us. They focus predominantly on the retail space, and they usually tend to send US dollars in country, and there are fees involved. So it's a different business model. And that's why back to Michael's presentation, we hope that customers will compare and refer to the true FX rate before you make your transfer decisions.
Yeah, no. Thanks for that. I don't know if any other questions from any participants. Thank you, Matt. Thanks, appreciate that. It's all right. If people nothing. Oh, there we go. Thank you to all. Well, thank you, Rob. Yes, no, appreciate that. Just quick head up. So I'll actually be in Wellington tomorrow. I'm not in Wellington today. I'm flying there tonight. But I'll be at the day 2 of the conference in person. So if anyone wants to come and have a chat to me, I'll be around. I'll be there at the dinner as well. I'm just very excited to finally meet and see people, both our existing clients and people that we've been speaking to in person after so many years of virtual events, as we've all come accustomed to. It'd be nice to see people face to face. So I'll be around. You're more likely to come and have a chat to me. And hopefully our friends from Caritas might be around as well. I think that might be it. Do have one last slide. So if anyone wants to just get in touch directly, just got our email addresses up on the screen as well. More than welcome to drop me notes, or you can reach out to me through the online platform as well. Just drop me a message. I'm happy to chat with anyone about any of the topics we've covered here today. More than happy just to see if we can help anyone. It's always an option. So, and thank you very much to our presenters, Timothy, Amanda, Catherine. I really appreciate your time, and everyone for attending today. I hope you all found the session useful, and I wish you all a very good time for the remainder of the conference. Thank you.
Thank you, everyone. Thank you, Michael.
Thanks, Michael.
Thanks. Bye-bye.